Good afternoon. I'm with Gwen Preston of West Red Lake Gold, and this is actually my first conversation on video
On
with
video.
Gwen. With Gwen. Gwen, how are you doing today?
I'm good. I mean, I haven't slept a lot in the last week because getting a pre-feasibility study out the door takes a fair bit, but it's really exciting to have it out, right? This is something we've been working on since the company got started 16 months ago and really intently for the last few months. So it's really exciting to get it out there so that the market can see what it is that we're going to be doing in the very near term at the Madsen Mine.
Yeah, I know you've had a busy start to 2025. It's not a simple task to put out a pre-feasibility study and get it out across the world and then do a webinar, et cetera, et cetera. But you've done it, and here we are today. And it's kind of interesting the way junior mining works. Like companies work for 12 to 24 months, spend millions of dollars to publish this document, and then okay, what's next?
Yeah, exactly.
You have like a day to soak it in, and okay, what's next? We're gonna
I know.
do a
What have you
bulk
done for me
sample.
lately?
Exactly. Yeah. So let's dig into West Red Lake. So the headline is 315 million uh is that, is the NPV, and that's after tax, and the annual free cash flow averages 70 million.
Mhm.
So those are strong numbers. Free cash flow of $70 million a year. That sounds good to me as a shareholder. And one of the things I picked up on the webinar is this is based upon a $2,200 gold price environment. So it's conservative in that respect. And there is considerable room for more upside in terms of the mine life, as you do more drilling, bring up some of those ounces to proven and probable. There's lots of room for expansion across the property footprint. Obviously, there's a bunch of zones that have just been touched a little bit in the past and need some more tender love and care. So, tell us about this study and what it means.
Absolutely. You touched on a lot of the really important points just there, for sure. So this is the initial Madsen mine plan, right? And what this mine plan does with those, like you say, those strong numbers, $315 million NPV and $70 million of free cash flow annually over a 6-year steady state production mine life. Yes, the mine life is somewhat short, but those numbers really underline the rationale for what we're doing here, which is restarting this mine. And I think, like we've always said, that there's 2 reasons to restart the Madsen mine. One of them is that the gold environment is very strong and it's very hard to put a gold mine into production quickly, let alone to find an asset that had all of this incredible infrastructure and a really good high-grade resource in a famous and easy operating gold district in the world. So that the rationale for restarting the mine, this pre-feasibility study, which just outlines what we have touched and can put our hands on right now, really underlines that rationale. Let's get this mine started because economically it makes sense to do it right now. But what's adds to the excitement there is that once you get the mine going, we don't expect to always have we don't expect the mine life to stay at 6 years or 7.5 years, which is like the full mine life, including the ramp up and ramp down. Once you're underground in these systems and you're driving tunnels and you're drilling in all the areas and you have the cash flow to look around and the access to look around, we really do think that we're going to find more in the main Madsen area, down below the Madsen area, and like you said, in a lot of these nearby opportunities that either exist or are developing or whatever they are. And we will pull those into another mine plan, in the not too distant future. So what we really like is that this PFS underlines the rationale to restart the mine, and that reinforces that it makes sense to do it. Plus, there's all this opportunity for it to become more just a little bit down the road. So yeah, it's exciting for sure.
And yeah, so there's no way that you guys are doing this for a 6-year or 7-year mine life. There's clearly a much longer term plan here. And it just simply that's what you had to put into this document, that it's a 7.2 year, mine life. And I think there's also substantial room to increase the average grade with more drilling. There's lots of low-hanging fruit, so to speak, here at Madsen. So now that we're here, we have the PFS out, we see the economics, we see the value proposition. What's the timeline going forward here as you do the bulk sample and start the ramp up?
Yeah, for sure. So, I mean, I want to answer a whole bunch about those upside opportunities as well, because like you say, and you referenced that in your introductory question as well. I mean, not only did the financial model use a reasonably conservative gold price, a long-term gold price of just $2,200 US, but the reserve calculation, so the number that SRK used to decide which parts of the resource converted to reserve, that was incredibly conservative at $1,680. Obviously, $1,000 almost less than the current gold price. So there's a huge amount of potential that we've already touched, as in 1.1 million indicated resource ounces that did not yet convert into reserves because of that conservatism. And then lots of targets, like you mentioned, close to the deposit, like this fork zone where we just recently showed that the data has already identified like a core zone that looks, we don't know what the grade is yet. You can see the grade contour on the news release that we put out in January. I mean, is it in the 10 gram per ton ballpark? It probably is. Then there's Rowan that's almost 13 grams per ton. Let's pull those in. Let's see if we can boost the grade and then extend the mine life and do all of these things at the same time. So the upside potential from this mine plan is so apparent. Like it's right there. It's like we can touch it. As for timeline from here, that's, you also said like you put the PFS out and then everyone's like, okay, what next? And that's usually how it goes, because usually a PFS comes out and then a project goes into a whole whack of definition drilling and permitting and financing, and they're a long ways yet from production. But we're doing it all at the same time. We are very close to production. In fact, we are test mining right now, and we plan to be turning this thing on as a mine in the middle of the year. So yeah, the timeline from here is continue to build up these bulk samples on surface. We're mining several stopes in several areas of the mine. So that will result in a bunch of stockpiles on surface that are the bulk sample. And then in March, we're going to process those. And so we will be able to, after that, put out a news release that says, here's what our model said each of these stopes was going to provide grade and tonnage. And here's what we actually mined and processed from each of those stopes, grade and tonnage. And that, I think, is going to be just a really important moment, because the whole premise here is that we, because of the definition drilling that we've done and because of the capital projects that we've done to enable an efficient mine, and because of just our approach to mining and operational readiness, that we are going to be able to pull material of the expected tonnage and grade to the mill, and then do it at the right cost. That's what the prior operator wasn't able to do. But if that's the premise, this reconciliation, this bulk sample process, success on this bulk sample process would validate the whole premise, right? So that's why we're really, really excited that this bulk sample process is underway. We'll do some initial results from that, sampling the sample, so to speak. We have really rigorous systems for how you chip sample around the area, or like where on the scoop you take samples as you collect the muck from underground to take it out. So we'll be able to generate some initial reconciliation results, hopefully at the end of this month, early February, it'll be in that range. And then we'll process those bulk samples in March and put out the full reconciliation results in April. And then as we're putting those out, that's when we're going to be building up the inventory and getting ready to just start putting ore through the mill. And, that's the middle of the year, and then ramping up from there to the end of the year, aiming for commercial production around that time frame, end of the year, like Q4, Q1, we'll see as we get a little closer. We're not going to pin ourselves down to a date, but it's all happening. It's right around the corner.
So basically what you just said very well was we have basically a 12-month plan here to get to full output. full, throughput, at the mill, starting with this very important bulk sample, which could be quite a strong catalyst. I mean, some investors may wait for the ramp up to get further along to bet big, but I think for a lot of investors, the results of the bulk sample in April will be a very important key milestone for the company and this restart, that it's actually happening, and the show me story, quote unquote, is showing. You're actually doing it. What do you think, and what have you heard from investors that you've spoken with over the last several months? What are the catalysts that they want to see to really revalue this story to that 300 or 400 million-dollar area?
Yeah, so I think the two that we just accomplished are absolutely on that list. So getting ourselves to the position where we have the money to do it, that was something that a lot of people were waiting for. So closing Nabari, that 35 million US debt facility that we closed just at the beginning of this month, a few short days ago, that was a really important catalyst that a lot of people were waiting for. They wanted to make sure that we could access the rest of the capital and do it in a non-dilutive way. And then getting this PFS out. I mean, PFSs really matter when you're trying to bring some of the bigger money in, right? The institutional money, a lot of the funds, a fair number of them, especially if they're more generalist funds as opposed to mining funds, and which means they're often the larger ones, they require more tangible stuff, right? They require a report, they require metrics before they're allowed to invest in a stock. So the PFS is out now. That increases the number of investors out there to whom we can pitch this story. So that really matters. And then, yeah, the reconciliation results for sure. And I agree with you that the reconciliation results should do a bunch of the show me work. I get that also that reconciliation isn't going to address the cost side of things. We won't be able to demonstrate our ability to mine this ore body at an effective cost until we're in production. We have confidence that we're going to do that, but the cost side of the show me story, that requires production. But the mining, grade, resource accuracy side of the investment thesis, that's what we're going to be able to demonstrate with the bulk sample. So I'm optimistic that as we progress through 2025, we're kind of like 2024 was a grind. It was raising a lot of money and doing a lot of work to set ourselves up so that we could start knocking balls out of the park. And that's where we feel like we are right now. Get the debt done, issue the PFS, do the bulk sample, start the mill up, start putting ore through the mill, ramp ourselves up through the rest of the year. That's what we're looking forward to doing this year.
Yeah, so that's an interesting contrast that you just sort of cited, because the share price peaked at some point in Q3, and then Q4 was rough. I mean, look, it was rough for the gold sector
Yeah.
overall, but it was also rough for the West, Red Lake share price as well. But here we are, Q1 2025, and you have a very clear path forward to full restart of the Madsen mine and mill, and potentially significant free cash flow if things work out. Yet the share price has come down, so it's like you've reached this major milestone, this very important milestone for the company, yet the share price is low. So this could be a really good opportunity here for investors to take a look at it, maybe acquire, some shares here. Basically half of the NPV. I mean, that's what the market cap is right now. It's basically half of the NPV at a $2,200 gold price, with all those potential catalysts to drive more value and a higher total value for the mine over the coming years. So, people love to have expectations and sort of set those expectations for them. So if you were to set the expectations for how the ramp up is going to go, like what's the throughput going to be in August or October, what ballparks are you expecting?
Yeah. So I mean, we want in June to be starting in around that 400 ton per day, let's get it going. And then ramping up, is it going to be another 100 tons per day per month? Like that sort of stepwise progress. I don't want to, we haven't published that guidance, but that's certainly our goal. And we're very motivated for that for two reasons. I mean, for one main reason, which is we are basically a gold mine right now who's not producing gold, right? We have 140 people employed, and we have like 3 underground crews 24 hours a day operating as they drive the connection drift and drive access and do the test mining program and, give our drills access for exploration or for definition and exploration drilling. So we currently have the cost side of being an operating mine without producing the gold, without having the revenue side. So we're really, really motivated, right? This isn't sort of a wait until we're total, like there's nothing that we're waiting for to start producing money. There was actually, I referenced this on the webinar call this morning, and I'm gonna reference it again because it's kind of I loved this conversation that I had yesterday. I was chatting with one of the analysts who follows us, and his question was, so if you waited another period of time, 6 months, a year, would you have more confidence in your ability? Sorry, that's my blood sugar monitor. I'm just gonna tell that to be quiet. Would you have more confidence in your ability to restart this mine? And my answer was, actually, no. If we waited 6 months or a year, we could probably have bigger numbers in the pre-feasibility study because we would have been able to do more drilling and potentially increase the conversion of resources to reserves. And so we might have a longer mine life and things like that. But we have an 18-month mine plan internally that is a stope-by-stope engineered mine plan with mineral inventory, definition drilled, and ready to go. That's what we need. We have done, and we've built up our team. We've put our operational readiness practices in motion. Like right now, the CFO is down at site because they're kicking off the new ERP program, which is how you track all of your needs and costs on a mine site. So this thing, we've done the work to get this thing ready to go. So more time wouldn't actually give us more confidence in the restart. It would cost us more money. And we don't want to do that. We want to do that. We're doing this for our investors. So we want to start making money. And then once we're making money, then we can use some time to bring to life the additional upside that we really see at this asset. But like, we are really motivated to start producing gold. So we're going to do that starting in the middle of the year.
Okay,
There's a
yeah,
longer answer than you may be
and
expecting.
that's no, that was a great answer. And that is in the mining industry, 4 to 5 months is literally near term. It's like
Yeah,
tomorrow.
it's
This is
true.
an industry where most timelines are 4 to 5 years or 8 to 10 years. So four
True.
to five
Yeah,
months
yeah,
is near term. So you guys have done some heavy lifting to get to this point. I mean, this is an exciting moment for the company and all the work you guys done. I want to ask you a little bit about key players on the team, but first I want to just point out something I think is very important for people that are viewing this. So the $70 million a year of annual free cash flow that is possible here at a $2,200 gold price. I mean, the margins that you're looking at today's gold price at 2670 are $1,000 an ounce, very substantial margins.
yeah, yeah.
And then the average annual gold output 67,600 ounces. So people can do the math on those numbers, and obviously there's a bottom line once you take out all the corporate expenses,
Mhm.
and there's like an operating line, which is obviously going to be a lot larger than the bottom line. But these numbers are very robust, and when you think about the price per gram of gold in Canada, and then you
I
think
was
about
just having this conversation with Shane this morning, the price
yeah, and
per gram of gold in Canada. That's so
yeah,
funny.
and then an 8.2 gram per ton grade on average. And then like an operating cost per ton of 270 or 300, or even let's be conservative and say 350.
Mhm.
You're talking about $700-800 per ton margins,
Yeah.
on the operating level. So this is a cash cow here. I mean, not to be too promotional, but this is a cash cow based upon this document that you guys have just published.
I mean, your words, not mine, but I will lean into several of the things that you just said. So it's hilarious. Shane and I were just this morning talking about Canadian gold price per gram. And the reason we were talking about it is because, that extreme conservatism in the reserve cutoff price, $1,680, that also the reserve cutoff calculation also used a conversion rate of 1.3 grams per, or 1.3 US dollars, Canadian dollars to US dollars. I knew I could get that out if I just tried long enough. And when you put both of those, when you combine those conservatisms, I mean, what it really suggests is that our economic cutoff grade is like 2 grams per ton. That's what the economic cutoff grade actually is if you look at current gold prices. And so, using 1680 and that other FX rate, SRK was using a cutoff that was more like 5 grams per ton. So if you think about the difference that makes in what kind of material becomes economic to mine when you're down in an operation, it's dramatic. And one thing that I'll point out there is that we note in the news release here that the study has us about 60% mechanized cut and fill, which is a more selective and higher cost, slightly higher cost mining method, and about 40% long hole stoping. Once you operate practically in today's gold price environment and use practical cutoff grades, we expect to do a lot more long hole stoping than this pre-feasibility study lays out. So I think that on its own is one way to underline that our costs may well be even less than what's in this than what this study outlines. And then also, you'll notice the operating costs, as you noted, are quite low, $919 US per ounce. That's our total operating cost. The thing that boosts it from $919 to $1,681 as an all-in cost is primarily the access that you need to get to each mining zone, because, the reserve is a little bit broken up because of that super conservative reserve cutoff price. Do you see how I keep coming back to the same thing? So you pull these things together, you end up, we expect to, on a practical basis, be mining a more continuous mineral inventory than what this study outlines. And so that has positive impact on the numbers from this study, which are already, like you say, they already work really well.
Yeah. So the bulk sample is pretty big, and that will be March, April timeframe. Then, if all goes well with that, then we're ramping up. May, June, we're stockpiling ore for the mill. We're starting to process that ore at the mill. Then we're ramping up the throughput of the mill for the rest of the year, hopefully to reach a full throughput, max throughput rate in Q1 of 2026. So the timelines are pretty clear here. The catalysts are pretty clear. I think we know what to expect. The final question, Gwen, I think it's an important one because most investors are just focusing on the numbers and how much money are we going to make, what's the cost, how much more money does the company need. But let's talk a little bit about some of the key players in the team. Obviously you, obviously Shane, but who else are really key players on the team that will be very instrumental in having this mine get back into operation, in the next year?
Absolutely. And I love that you asked that, because building up the team has been a big focus over the last sort of 5 months in particular. The site team and the corporate team, but in particular, the site team has really built. And that's one thing when we talk about, before the pre-feasibility study came out, I tried in several ways to underline, that this pre-feasibility study is really a pre-feasibility study plus, because we are in operations. The thing's built and we have real costs because we're underground, we're operating. And the other thing that being in that position does, being underground, being operating, what that does is it lets you figure out your team. We from the you know, the miners all the way through to the managers at the mine site, you end up cycling out the ones that aren't working out as well and pulling in people who are better. And that process has already reaped us a lot of benefit. Like, think about driving this connection drift. That was a huge learning experience for us. You get going, what isn't working? Okay, let's fix that. Who isn't working? Okay, let's fix that. What more direction do we need? Or, you know, that's called operational readiness. And so having the team developed to that point is just a major de-risking for us. So on site, I mean, one of the most important people in this company right now is Jillian Christmann, who is our senior geologist at site. She was there through the Pure Gold days. She learned through that process. She learned as Pure Gold, late in its time, brought in some really good people at the end, and they really changed the whole approach to how to model the resource and how to engineer stopes onto it. She was part of that remodel. She then took that process and has refined it several times. And that is the process that we now use. That's what's determined our 6 to 8 meter spacing that we want for definition drilling. That's what's determined our confidence matrix that we use before we're going to engineer a stope. That is what we do. And she knows this ore body like you wouldn't believe. So she's one example of the kind of quality people that we have on site. We also brought Dave Towell to be our mill guy. I'm sure his official title is better than mill guy, but that's what I'm going to use right now, apparently. But Dave ran the mill for Pure Gold. In fact, he moved the mill from where it was previously, the parts that got moved. He built it for Pure Gold. He ran it for Pure Gold with high availability and high gold recovery. And then he went and did some other things for a while, and we brought him back. So he literally knows the mill inside and out. And there's quite a few people of that nature who came through the previous operator learning curve and are now, you know, really excited to be doing this under a different setup. And then we're pulling in some really phenomenal additional members to the team. And actually next week, we're going to announce somebody else who's joining the mine site team who we're really excited about. So Shane gets a lot of credit for this. Shane is a really good leader, and he deeply understands the value of good people. And I know he really believes, and I think we're seeing in West Red Lake that good people attract good people. Like, there's just a really solid team here. And yeah, it's nice to have.
Yeah, that continuity that you just laid out is really priceless. We learn from failures, we learn from falling down in life and in mining and all kinds of other things, and it's priceless.
Yeah.
So
Yeah.
having some of those people from the former operator is super valuable, and it's great to see that you're able to attract high quality people that are frankly in somewhat short supply in the mining industry in 2025. So that
Yeah,
speaks
for
to the
sure.
quality of the company and the project. Gwen, thank you so much for your time, and I'll see you maybe next week in Vancouver.
I'm sure. I look forward to seeing you in person, and thank you. Thanks everyone for watching, and look forward to 2025 and delivering on all the things that we just talked about.
Cheers.